For a reversal trade, you are to focus on the upper Bollinger Band. For a sell, lower Bollinger Band for a buy, and your indicator window, which is the TDI indicator. Your focus should be on the level of 70 for a sell and on the level of 30 for a buy. And when it comes to continuation trade, your focus is on the middle Bollinger Band, either for a sell or for a buy, and the 50 level of the RSI on the TDI indicator, which is this point you are seeing here, will now determine your choice of whether to buy or to sell. And then for the Bollinger Band, you are focusing on the middle Bollinger Band on a lower time frame, which is from 1 hour to the downside. In this video, I'll be sharing with you how exactly you can apply this special setting of the Bollinger Band and that of the TDI for you to have a trade execution of both reversal and a continuation trade, which is a pullback, in such a way that you will hardly have a loss trade. So first, let's begin with price reversal. When you want to get a price reversal, which means that when we talk about reversal, we are talking about price changing direction. That is trend direction change. For instance, the price has been buying. So when we are talking about this reversal, we are now expecting price to change from a buy trend to a sell trend. So what are these criteria? First of all, from your 1 hour time frame upward, you want to see price touching the upper Bollinger Band. For instance, you are expecting a sell trade. So first criteria, price is touching the upper Bollinger Band, piercing the upper Bollinger Band. So you can see price piercing this upper Bollinger Band. Number 2, you want to see a divergence. Now this piercing of the upper Bollinger Band must be such that it will create a structural difference, okay, to give you a clear high and a clear low, which is what we are seeing here. Then the next thing you want to see is that for you to get what? A divergence. So I've talked about divergence on this channel several times, so you can go ahead and confirm that for yourself. So if you look carefully here, we are having a divergence. So this is a price divergence. The indicator is doing the opposite of what the main chart is doing. So here is our clear divergence. Now that we have this divergence, we have met up with our criteria number 1. Price is breaking through those upside, and then you have a divergence. The divergence alone being established is not enough for you to conclude that you are in a downtrend. What is the next thing we want to see? We want to see price break the last structural point. So in this scenario, this is the movement. We have this higher low, we have this higher high. So we want to see price come down and break this last structural point. So, and you can see this structural point was broken by the movement of price to this downside. Now that we have established that this point has been broken by the movement of this price to the downside, here is no longer what? Is no longer a valid zone. So we are now looking for opportunity to do what? Opportunity to sell. So we will now pick up our point of interest, right? So this is our point of interest. That other block has been marked up there. So we are expecting price to do what? to pull back into this zone, retest that other block and continue to sell to the downside. So let's trace this. Let's go to our 15-minute time frame. So can you see that? So on this 15-minute time frame, that is the breakout structure we are talking about. So you see there, this is a higher low and this is a higher high. So this structural point now has been broken by the movement of this price. So look at this 15 minutes, we have this imbalance on the 15-minute time frame. Can you see that? Beautifully well. So that is the imbalance. Now look at what happened. Price now pull back. Do you see that? Price pull back to the zone of the what? Upper Bollinger Band. So your reversal will happen from the upper Bollinger Band on a lower time frame. So you see price now has pulled back to the upper Bollinger Band, the zone. It must not be a line. Then look at our TDI indicator. TDI indicator must be coming from the level of 70. You can see that the TDI line is at the level of 70. And then you see this candle, this bearish candle that shift price to the downside. So this is our sell entry, and then our stop loss is here, and that is the beginning of that trade movement. So you can see how the price keep pushing all the way down, right? You can see that price pushing all the way down. So this is how you can catch up with your reversal trade. Now let's look at how do we take a continuation trade. Remember, we said in a continuation trade, which is a pullback, our focus is first the middle Bollinger Band. The middle Bollinger Band. Okay, so let's go into that. Now looking at price movement, price has successfully at this zone break the middle Bollinger Band. So in all of this movement from here now, price is stable below the middle Bollinger Band. So now that price is stable below the middle Bollinger Band, if you look at these zones, you realize that here we have an imbalance. So we have a typical imbalance on this candle. So we are going to mark any point of interest that we see below the middle Bollinger Band. It can be a smart money cube, it can be a fair value gap, it can be an order block. But in this case, we are having what? A fair value gap. So here is our fair value gap. So do you see that? Let me zoom so you can see how bold the fair value gap is. So here we have a fair value gap, and this fair value gap is below the imbalance. Again, here too we have a fair value gap, and this fair value gap is below the middle Bollinger Band. So now that we have marked this fair value gap, you can see that obviously, and then you can see price return into that fair value gap. So on this 1 hour, we can get a candlestick confirmation for a sell. Okay, but if we must sell in this scenario, we want to see price doing what? Come to the level of 50 of our TDI indicator. So we want to see our TDI line crossing 50 to the downside. The TDI line we are referring to is the green price line, which is the green TDI red line. So look at here, we have that cross, and then here we have this bearish candle. So this should have been our entry, and then you see how price sell to the downside. So this is how you can take your continuation on this higher time frame. So let's move to 15-minute time frame and see if we are to take that trade based on a 15-minute time frame. So here you can see that pullback, and then you can see this bearish pin bar candle that forms there. So you can take that entry there, and you can as well take this entry from this upper Bollinger Band. Then you wait for price to close below the 50 of the TDI, and then you can make your sell entry. The advantage of this trading pattern and this indicator is that both the TDI and the Bollinger Band are leading indicator. This is not a lagging indicator, and as such it can help you to escape any form of lagness or drawdown. This is instant price action indicator that you are seeing. So thank you so much for watching, and if you are coming across this video for the first time, do well to hit on the subscribe button, like, share, turn on your notification bell so you'll be the first to get notified when we upload our next videos. So let me run you briefly through the setting of the indicator. Okay, here is our Bollinger Band. The period is 130, the deviation is 2.0. You can see the settings there. Then the style, you can see the color is green. After that, we have our zigzag indicator. This helps us to identify major points of price reaction. So here is what you have, and then we have our relative strength index. The period is 13. You apply it to close, and of course you can see the level 30, 50 and 70. Okay, then we don't need the color, so you change this to the background, the shade background. If your background is black, kindly change that color to black. Then we have our next moving average. The period is 2, the shift is 0. Alright, so you can see you apply to previous indicator data, and then the color is green. Please, this color is compulsory for better understanding of how this strategy works. Then the next is period 7, simple. You apply to first indicator data, the color is red. And then the next is our Bollinger Band. The period is 34, deviation is 1.619. You apply to first indicator data. As you can see, the styles is blue, so you follow suit and do the setting. The last but not the least is our moving average. The period is 34. Method is simple. You apply to first indicator data. If you've done that correctly, the color is good. Your chart should be looking exactly like mine. So thank you so much. Do well to hit on the subscribe button, turn on your notification bell so you'll be the first to get notified when we upload our next video. And registration is ongoing for the last batch of our mentorship class for the year. So you can do well to hit up on the link in the description of this video so you can be the first to enroll and be part of the mentorship training course.